Hello and welcome back to Talk of the Town. We're talking today about investing. We're joined by the expert, Robert Cummesford, who is a Senior Wealth and Portfolio Manager for SVA, Plumb Financial, and I'm so glad to have you on the program.
Thanks for having me.
So today specifically, we're talking about ESG investing or sustainable investing, and there's been a lot of discussion about this recently. What does this mean?
Oh, this is the trend in the industry that really tries to align investments with someone's personal values. So you might call it mission-based investing. Really, a lot of different terms are used: sustainable investing, green investing, socially responsible investing, or ESG. And ESG stands for environmental, social, and governance. And what that is going towards is how companies are making decisions around those issues in their day-to-day business management. So they all generally are referring to the same strategy, but they're implemented in different ways.
So I can see how people might be interested in investing like this. Makes sense, right? You value something, you want your investments to follow suit. But you mentioned that there's some differences, and it could be a little confusing. So explain how the two areas differ.
Yeah, it certainly can be confusing with so many different terms. So they all generally are going toward the same thing for as far as an investor trying to do well by doing good. But socially responsible investing, or SRI, is really an older term. It's been around a long time. It's really geared a bit more toward excluding bad companies, bad apples. You want to avoid investing in those areas. So you could think of sin stocks. You might avoid companies that are involved in alcohol or gambling or tobacco or weapons manufacturers or even energy companies. You just exclude those from your investments. ESG is a more recent evolution of socially responsible investing. Again, looking for positive influences on environmental, social, and governance factors. So you might be looking for companies that are engaged in more use of alternative energy or reducing their carbon footprint, or they might be looking to increase their workforce diversity or empower women in management, things like that. Impact investing is another term that is used quite a bit. I like to view that as ESG on steroids because they're looking at the same environmental, social, and governance factors, but they're taking more of an aggressive stance. They might be looking for measurable results or taking an activist shareholder stance and actually trying to influence corporate and board managements on their activities in these areas. Sustainable investing is really more of a general term, so it might mean something along the lines of ESG or SRI, but it could also be referring to something as far as the day-to-day business financial management or their business operating activities. So it's important to understand what they might be talking about there.
So this is interesting for a variety of reasons. One, for a personal investor, but also I find it helpful that it puts a little bit of additional pressure on corporations and companies to act responsibly.
Sure.
So kind of helpful on two sides. Now, why do you think it is that we're seeing more investing like this today than maybe 10 or 15 years ago?
Yeah, I think interest is growing for a variety of reasons. One is performance. Years ago, there used to be a belief that you could either invest to do good or for positive returns, but you couldn't really do both. Part of that came from socially responsible investing, excluding entire groups of companies, so entire industries or sectors. And in the short term, sometimes those companies could actually perform well. So if you excluded those types of companies, you would end up underperforming. So earlier investors in this area could sometimes be disappointed in the results that they got. But more recently, we've seen that trend change a bit with ESG. As we're looking for those positive attributes, a lot of studies have shown that ESG investing returns are much in line with more traditional investment strategies or might even be a bit better. And that sort of makes sense when you think about the basic premise that if they're making good, sound business decisions along these lines, that they should benefit over the long haul with better earnings and revenue growth, as well as higher stock prices, more so than other companies. The second area has been, there's been more products brought to the market that are investing along these lines. So with that, there's greater marketing dollars that are thrown at it, so it's increasing investor awareness from that standpoint. Lastly is a demographic shift that's going on in the industry. So there's always been certain people that are interested in investing like this. Some surveys show that as much as 75% of the general population would be interested in investing with an SRI ESG strategy if they can understand it and find one that suits their needs. But then the millennials come into play, and the millennials have shown even a greater predisposition to invest alongside their personal values. So this is going to be very important, especially as they take on a greater proportion of the general workforce, as they invest their earnings into their 401ks and so on, and as they inherit wealth from the older generations. It'll become very important from how those dollars are invested.
Isn't it fascinating? Thank you for sharing this with us. If this sounds like something you might be interested in, but maybe you need a little help, sounds like Robert Cummesford with SVA Plumb Financial can get you covered. Thank you for sharing this topic with us today. And thank you for watching Talk of the Town. We've got more coming up after the break.